Hi guys, how are you? Welcome back. Welcome to TradingView. Welcome to my subscribers. Welcome to YouTube. Let's do a crypto um, video. And before we start with the crypto stuff, I'm not sure if I posted this on the last video, and I do want to cover this. All right. You know, back on I think it was May 2nd, right here. Okay, May 2nd, I said, take a look at this setup here because it's important. Um, what it basically is it's showing how airlines reacted during 9/11. Right, it went up for about a year, and then it started to fall apart, and so did the rest of the economy. Now, I was asking myself, do we kind of have the same pattern going on here? Right, we have the structure going upwards after a big drop. It's the same. We do have a head and shoulders right in here. Right, can this be the canary in the coal mine in terms of the economy going forward? And, looking at it now, it is about a year long. And, let's see how this progresses. And obviously, it is starting to fall apart. Now, the thing about airlines is that they're very highly economically sensitive and they're very capital intensive. So, um, when airlines start to go south, typically so does the economy. Okay. And it's been going down for a while. So it's not like it just, oh, wait, Omicron came out and this is why. This has been going on for a while. You hear a lot of good news, good news, good news. But the reality is, when you look at labor force participation, there's not a whole hell of a lot of good news here. Okay. It's been going down since 2000 as deficits have increased. But, when you're telling me that the unemployment rate is wonderful, whatever it is, yeah, but that's with a smaller labor force participation. If you were telling me how wonderful unemployment rate was up here, including all these millions of people back in the workforce, then then you're talking a different game. So, um, you know, keep that in mind. Keep that in mind. Now, what does that have to do with the airlines and the economy? Well, we could be ending up like we did in 2002, 2003, where the economy started to slow. Only this time we can't lower interest rates, we can't increase deficits because we have an inflation problem. So it puts us in a bad part. But anyway, keep this chart in mind. Take a look at it once in a while. I think it's going to be beneficial. All right, let's get on to cryptos. All right, total market cap of cryptos. What do we know? It's a 1, 2, 3 up. This drop didn't really concern me that much. I put this upper trend line here, the gray one, and it's gray for a reason because I don't think this is valid point to anchor um, the second anchor point here to make this a valid. Why? Because it hasn't um, hooked enough. Okay, so what is enough hook? Isn't this enough of a hook here? Well, not really, because it's still in the context of an uptrend, right? And the uptrend is going back to March 2020. So we're still within the uptrend. Now, if we start to break the 2-year uptrend, a year, whatever it is, uptrend, then in that case, I would consider this, it doesn't even have to come this low. I would consider this as a valid hook over, and then this would become a valid point to anchor the upper trend line. Okay, and then the structure that we would see is something to this effect. All right, so a sideways price action for a while. Okay, now what do I like? What do I not like about it? Well, when we look at the previous highs, there are always potential areas of reversal. Okay, there's several ways that double tops and patterns, whatever you want to call them, occur. there's either going to be a lower high or there's going to be a higher, there's going to be a higher high and then it starts to fall apart. Now, this particular one, okay, broke down from this structure here, which needed to correct, right? If it's pointing one way, it's going to do the opposite. That's just the way markets move, right? It broke down. It did come below the previous high here. And usually when it does that, it kind of does it in a more thrusty kind of way. Okay, it didn't do it this time. But still, I don't like the fact that the way it broke down was a structure below a structure and it created that pressure. Okay, it's creating that pressure, and that pressure kind of scares me a little bit because it broke down again, which, you know, when you build enough pressure here and it really starts to dump. And if it starts to dump, then you break the uptrend line. Okay, and that's going to be problematic for a while. But we're not there yet. Okay, we do have the roof here, right? That's kind of bearish. We are below the previous high, and we are below the 63-day moving average, which is a quarterly average. But again, we do have this support area. This is the last part, last line of defense, if you will. Okay. So let's see how this is going to play out. And let's do a little bit more analysis with Bitcoin and Ethereum, the two largest ones. You know, there's a number of ways you can do this to avoid any kind of increased risk. And what you could do is you can sell out completely here and say, you know what, I'm just going to buy up here. If it breaks out, then I'll just be a part of it on the way up. And I don't have to worry about the downside. Okay. You can take 50% profits and do the same thing. You know, it depends on how you want to do it. It's always a personal preference and risk tolerance and so forth. Or you can just keep it and hold it until, you know, this starts to break. Depends. Now, remember, my charting is designed to find key areas. And this obviously is a key area right in here. Right? Why is it a key area? Because it can either bounce, go to the moon, or fall apart. Okay, so these are key areas to pay attention to. You know, long-term support. It's a key area where you want to observe. You want to see if it's going to hold. It will do something like this, and then start to break out, and then it'll start going to the moon. Or it can build more pressure, and then just boom, you'll have a big, large drop day. Scare the shit out of everybody. And you know, if that does happen and you are holding, more likely than not, wait for the bounce before you sell out, and then they'll start to go down. Okay, doesn't always happen, but often it does. You can save yourself a lot of grief. All right, let's go a little bit more into the internals. Let's look at Bitcoin. Now, here's the nice part about this analysis is that you have a bullish setup here. Remember, if a structure is going one way, it's going to do the opposite, right? That's how it fools people. You know, how far it runs is a different story, but you are coming into the support area. You do have a bullish structure, even though it's going downwards, right? You do have a bullish structure for more upside. You do have a lot of inventory back here that you have to consider, you have to work through, okay, as you come up to the previous high. You need, you know, some time to develop. You could do something like this and then take off. So, you know, we'll see how this is going to play out. You know, you also have the higher lows, right? So it's looking okay. It's not looking all that bearish. Now, this is on the smaller time frame. If you look at the bigger time frame, you know, the fact that the structure is going up, 1, 2, 3, up, Okay, at some point that needs to correct. That's interesting. That's interesting that it's coming at a time when Omicron is, you know, prevalent in the news, and folks, whatever you hear on social media or media, just throw it in the garbage, positive or negative, it doesn't matter, because we're not going to know for several weeks what the real science is uh, going to be. Is it going to be worse? Is it going to be better? We don't know. So don't listen to it. But 2 weeks is a long time for the markets to wait. So they can shoot first, ask questions later, right? So markets start selling off, Bitcoin is not going to be any different, right? You're going to sell everything across the board. It depends. It depends. So again, this can be a possible double top uh, in the bigger picture. We're not there yet. Let's just take it one step at a time. Let's look at what's really happening for now. How can we deal with this in a more effective way uh, to be still a part of the trade um, while minimizing risk. And the way you can do that again is to buy the breakout, to put a buy order here in case it does a sharp breakout, or take some profits, or if it starts to fall apart here, then you want to take some profits, okay? Because then that would be a much bigger problem. All right. Ethereum looks a little bit more bearish. Okay. Again, you had the drop, you had the bull flag that formed, and then this is starting to build pressure at the bottom of the structure. It's a structure below a structure, as I call it. Okay, for more downside. Can it bounce from here? Sure. It could also fall apart. So again, this one, you can do the same kind of deal. Buy up here, minimize the risk down here. Okay. This one I did mark as valid, although I shouldn't have. So let me change the color here. All right, make that gray. Um, okay, so let's talk a little bit about SHIBA. A lot of people are talking about it, whatever. I don't trade these things, but I can tell you about chart patterns. And what is concerning to me is the way it's falling apart. It's just fading away. Right now, the positive news is it is holding the 63-day moving average, which is a quarterly average. Okay, so that's kind of good. But the tendency of these kind of moves is that it just keeps on failing. Let me show you an example of that. Okay, see what I'm talking about? See Litecoin? Just kept on failing for a while. All right, it's kind of the same thing here, although it's a little bit different because the drop was so pronounced, right? This big drop was so pronounced, and then it started to fall apart. So be aware of that. Be aware of this. You know, you don't want this to get much lower than the 63-day moving average, because what's going to end up happening is if it does another little drop and it starts doing something like this starts to roll over. Then every time it comes up to the 63-day moving average, it will just continue to fail. And that's what more or less happened here. See it? It dropped, popped, and then just kind of kept falling apart. This is what it looked like at the time. This is what resulted. So be real careful with this SHIBA stuff. Where is it? There it is. All right. Normally you would say, oh, this looks like a nice little bullish setup. It's pointing one way and it'll break out, and you want to buy the breakout, and it's going off to the moon. Yeah, well, we're not there yet. Okay. You need several things to happen. You need the micron to be not as bad. You need the markets to go higher. You need cryptos as a whole to go higher, and then you want to, see the breakout occur here. So again, you're probably better off, selling, setting a buy somewhere up here in case it does a thrusty kind of move, than it is to hold and watch it fade away. Okay, if they don't scare you out, they're going to wear you out. Remember that. Also be aware that this is a 1, this is a 2, and this is a 3 wave up. Okay, I don't do Elliott wave, I do Nick wave, but that's a 1, 2, 3 up, and now we're heading lower. Dogecoin, remember, if they don't scare you out, they're going to wear you out, right? So this looks bearish. Litecoin, I'm not really going to talk about. It's just a big bear flag setup. 1, 2, 3 up for more downside. All right, so just kind of keep that in mind. That right now there's some weakness potentially in crypto land. We're not there yet. It hasn't broken, but again, be aware. Lower high, drop, drop. 1, 2, 3. All right. At least in these smaller names. That's about it. Let's do Coinbase. Well, the thing with Coinbase is that it's starting to form this structure here. And it looks like one more down and then up. Okay, it seems like it's fading away, and it's fading away fairly quickly. Okay, it's kind of the same deal. Now it is above the previous high, so that's a good thing. But this is definitely a hook, so this is anchored properly. All right. So let's see how this is going to work out. Again, it depends on what Omicron is going to do, what the markets are going to do. There's a lot more to it than just looking at a chart. But, in the face of the unknown, charts are probably the best thing that you have going for you. So, again, we're not going to know for several weeks what Omicron is going to be worse or better or whatever it's going to be. I don't think it's going to be better, but whatever. Not as bad. And that's a long time for the markets to be wondering. So be very, very careful. Okay, it's okay if you miss some profits. There's nothing wrong with that as long as you minimize risk. There's nothing wrong with minimizing risk. And that's it for this video. Thank you very much. Thank you for your support. If you have any questions, post them below. And I'll talk to you guys soon. All right, take care. Bye-bye.